If China is impacted, which it certainly will if the tariffs stay on for a longer period of time, then with China being one of Australia's main trading partners, especially with our resources from Western Australia, that has to flow through and affect our economy. What we typically see in Australia and globally is a flight to property when investors get hammered in the share market and there's a lot of uncertainty in the share market. Historically, money has then flowed into property. And if at the same time as that, interest rates heavily decreasing, that's going to allow a lot more buyers to get into the market for first home buyers. And decreasing interest rates, the more that they 0.25% we didn't get too excited about. But if we're going to see, that some economists are talking about a full 2% reduction before the end of the year, that could make a big difference to household budgets.
Welcome to Perth Property Insider, where you will learn how to grow your wealth and improve your life using Perth property. Our show is brought to you by Investors Edge Real Estate, the highly rated and award-winning property management, sales and buyers agency servicing the whole of Perth. Now, here's your host, Jared Mann.
G'day and welcome to a deep dive episode where I'm going to unpack a mix of global and local forces. And isn't the media running crazy at the moment with Trump's new tariffs? We've also got our federal election, and Liberals have released some policy details, which I wanted to bring to you because I did cover off Labor's federal budget in an episode 2 back for you to check out. Just wanted to have a balanced overall view on how these things might impact housing, especially in Perth. And I want to look at what does all this mean for interest rates potentially, and how each of these factors is likely to impact the Perth property market. So very important and pivotal times at the moment. That's why I didn't want to wait a full quarter to include some of these things in my next Perth property market update. I thought I needed to bring them to you now. So first area to cover, Trump's tariffs and the global economic impacts. It seems like Trump's on everywhere I look on socials, everywhere I look on the news. He must be loving this limelight. And what I've thought would be first worth doing is explaining what the tariffs actually are. So tariffs basically are a cost that importers pay when they are purchasing goods from overseas, and they often will try to pass it on to the consumer. So all the American companies importing things that are needed for their manufacturing, for all the consumers over there, they're going to have to pay higher prices depending on which countries they get them from. Anything from China that's been hit with, larger tariffs. That's why the big technology companies are all having a big dip on the share market, because it's ultimately going to affect their business margins, affect the costs, and they won't necessarily be able to pass them on to consumers for some time to come. So the US, traditionally, when tariffs are imposed in any country, because the cost, at least part of it, is passed on to consumers, this tends to lead to inflation in the country that they're imposed. So how they usually work as a percentage, and how Trump has come up with these percentages, it doesn't seem to make much sense to any common person, let alone probably any economist. So how he's came up with these percentages is he's looking at the trade deficit, and if there's more trade going out, if there's more trade coming in than there is going out, he's basically increasing the tariff. And so Australia's come out pretty good with a relatively low tariff being imposed, which I think is 10% at the moment to certain industries and certain products. But other countries are then looking at imposing tariffs on importing American products and resources, etc. So that's where we get a trade war going on, where Trump imposes a tariff, the country that he's imposed it on imposes a tariff back. Things escalate. Canada's looking at turning off the power to America, and all kinds of things are going on. So what this also tends to lead to is that not only have we seen share markets get hit massively in the US, it's then spread to other share markets. Overall, investors are very concerned that with US consumers potentially stopping, profitability is getting hit, and also potentially changing their spending patterns, the overall cost to do business is basically going to increase. Things are going to slow down, not just for the US, but potentially at a global scale. It'll slow down the globalization and the free trade that we have going on around the world. It's really coming back to, making the US a lot more isolationist. It's going to force other countries to look at creating and more trade with each other to bypass the US. So that won't happen overnight. But it's also, I just wonder whether it's going to remove the US from having such a pivotal role in the global scheme of things. So it could be a negotiation tactic that Trump is using. He's done it before in 2019. Previously, he only imposed tariffs on China at the time, and it didn't occur for that long. And things did bounce back once the tariffs, we were on the other side of them. But if China is impacted, which it certainly will if the tariffs stay on for any longer period of time, then with China being one of Australia's main trading partners, especially with our resources from Western Australia, that has to flow through and affect our economy. So that's why our Reserve Bank and our overall markets are expecting that there's a strong likelihood that we'll have a 0.5 reduction in interest rates come May. Many economists are saying, why are they waiting till May? Why are they not responding immediately and calling an emergency meeting to reduce rates now so that we can get ahead of the global slowdown? In many ways, it's good that our interest rates at the moment are still relatively high. And unlike other countries in the world that started reducing rates sooner, we've got more of a lever that we can pull with interest rates to keep our economy propped up and re-stimulate things to counter this potential slowdown. So how this might impact Perth property is that what we typically see in Australia and globally is a flight to property when investors get hammered in the share market and there's a lot of uncertainty in the share market. Historically, money has then flowed into property. And if at the same time as that, interest rates are heavily decreasing, that's going to allow a lot more buyers to get into the market and a lot more buyers to have confidence in the returns that they can get on how affordable it will be to hold property for investors. And the gap between current rental yields and interest rates will close to such an extent that people will be able to borrow more, cost to hold property will be less, the ease of first home buyers getting in will be easier, for upgraders going into higher price points, it'll be easier. And I'm expecting that we're going to see a really big increase in demand to the property market considerably. So that's in the shorter term. I'm talking, next 6 months. It's very difficult to see beyond that and how long Trump may keep these tariffs in place and to what extent they may slow things. So it's also worth remembering as an investor that there's always something different on the horizon. Every 2 to 3 years, we get a significant thing to be worried about. You don't let it go to your head. You stay focused on the long-term fundamentals. And thankfully, if you're invested in Perth, you're in one of the best places in the world, and we're in a really solid state going into some of these potential headwinds. So overall, I'm extremely positive for what the property market will do over the next 6 to 12 months. But beyond that, I have some concerns. And we're not going to keep growing forever here. I think we've probably got 1 to 2 years ahead in general. So it's just going to depend what happens at a global scale as to how these timeframes play out.
Just real quick before we continue on with the episode, are you getting my email updates yet? If you're not, you're missing out on our suburb intelligence reports, which we tailor and prepare for your individual suburbs of interest, showing advanced stats and insights. Must get onto those. And I also send out exclusive invitations to our events, including webinars, sundowners, and workshops. So if you're not getting those, head on over to investorsedge.com.au/join and make sure you're receiving my email updates.
Now, let's chat about what I'm seeing in the Perth market sort of going into this. And since the start of the year, in my Perth market update, you would have heard that we had the interest rate reduction in February. Things were starting to slow down since September last year. The interest rate reduction had sort of sparked things. And then we've got a bit of a crosswind of this fear sort of starting. And then we'll likely have this interest rate reduction in May, which could be a 0.5 basis points when we only had 0.25 basis points in Feb. So in general, what I'm seeing out there is that buyers care more about the interest rates and their household expenses than they do international headlines about Trump. So any reduction in interest rates, I think, is going to be more exciting and definitely counter what may happen in the shorter term on that global scale. I'm seeing already before all this Trump stuff has hit the media and hit the world stage, the East Coast investors were pulling back from lower priced segments, and we mainly were just seeing local buyers still active, and especially in the middle price bracket, we're still seeing investors from over east in middle price bracket chasing value in there. And then in the middle price bracket, we've got all the upgraders coming from the lower end. So that's really the most active bracket now, and it'll become the really hot bracket over this next 6 months. So there's still opportunities for first time buyers to get in. Like, we're still relatively affordable compared to the other capitals. I'm still seeing that value when we compare around. And there's definite value for upgraders to move into the middle and upper price brackets. So what we need to look at really carefully over the next 6 to 12 months is to what degree China might slow down. How are they going to respond and handle these tariffs? Will they be negotiated out? And that could flow on to slowing down WA, especially project-wise. But then it's a good segue now into the election that we've got coming up on the 8th of May, I believe it is. Federal election this time. Don't get confused. We've had our state election and now we're on to the federal one. So this week we've had the Liberals come out and say that they're proposing a 25% cut in migration if they get elected, and they're going to put tighter student visa numbers in place. So as we know, migration has significantly contributed to the population increase in WA, which has really put a lot of pressure on the rental market and our sale market and really helped to push prices up. We've needed the people to fill the jobs. We've had very low unemployment still, despite so many people coming into the country. The problem's been that the housing couldn't keep up with the population increase that we've had. So a very simple solution that the Liberals are proposing is to ease the housing pressure by freeing up 100,000 homes over 5 years. It's about 20,000 odd homes a year Australia-wide. And it's not a massive amount. So 25% they're reducing migration by. So still keeping a reasonable level. The migrants will still choose, which states they go to. And for many reasons, it's easier to migrate to WA because it has a regional area status, and they can get their visas easier for us. So that's definitely still a big draw card for coming to WA over the other capitals. And I guess the expected impact of this, if the Liberals are elected, is that it could slow down the underlying demand that's driving the rental and property price growth. I sort of expect over the first sort of 6 to 12 months, any reduction in interest rates is going to drive demand far more than this change in migration policy. But I think in the medium term, say over the next 1 to 3 years, this will contribute to slowing down and decreasing the pressure on further price growth, not just in Perth, but across the board in all the capitals. So it may help to ease the affordability pressures, but I guess the timing of when that flows through and the actual impact is uncertain. So to recap, I did already cover off Liberals' other policies in the federal budget summary episode 2 episodes back. So go back and check those out. But I did want to mention this cut in migration that they're proposing because that's definitely a new one. I think when you also look at their other policy of allowing people to withdraw, first home buyers to withdraw 50 up to 50,000 from super, and I think they're including single mothers in that as qualifying as well with certain criteria around it. When you look at decreasing interest rates, that's going to enable as well a lot of extra buyers to get in. And even if Liberals don't get elected, Labor, if they stay in place, they've got their home buyers guarantee scheme where they're basically co-owning properties, and that's going to help a lot of first home buyers get in as well. So fairly good news, I think, for first home buyers, and decreasing interest rates is the more that they 0.25% we didn't get too excited about. But if we're going to see, that some economists are talking about for, a full 2% reduction before the end of the year, that could make a big difference to household budgets. So wait and see what happens on that front. But I encourage you to hold the course. Don't get too caught up in the media. Focus on the fundamentals and don't get spooked by things.
So just as we were going to production on this week's episode, which I only recorded last week to try to keep things really fresh for you, we've had both Labor and Coalition announced some big policies that are going to affect housing and our hip pockets, and I wanted to add them into this episode. So Labor have announced that a 5% deposit scheme would apply to all first home buyers, with them basically guarantoring the other 15%, meaning that they wouldn't have to take out lenders' mortgage insurance, and anyone with a 5% deposit could afford to get into a house. Now, that's going to be a real game changer for first home buyers and really surge demand in that lower sub 650 price points. And I think that's going to really fuel up that end of the market and then give those people more to upgrade into the price points above. So watch this space if Labor get elected on that. Coalition's come out and tried to match things for the first home buyers. They're allowing a mortgage interest deduction, which I've never seen happen in the whole time that I've been alive anyway, allowing first home buyers to deduct interest on loans up to $650,000 for 5 years, potentially saving them up to $60,000. So that combined with their superannuation access, permitting withdrawals up to $50,000, is going to really help first home buyers get in and also save a lot more along the way for up to 5 years. That's also, I think, going to surge demand in the lower end of the market for first home buyers. There was a couple of other cost of living tax reliefs that each of them are trying to do to sweeten things up for lower income earners. We've got a $1,000 automatic tax deduction that Labor are promising for work-related expenses, simplifying the process for millions of workers. So it might save them after tax $250, $300. Nothing major, but when you multiply it out across the country, it's going to cost the government a lot to do it. They've expanded free TAFE options. So that's really going to help more people access the vocational education and upskill. Coalition have come out since my recording and announced a $1,200 tax cut targeted at individuals under $144,000 annual income. But that's trying to hit some people in the hip pocket and sweeten things for the lower income earners. Haven't mentioned it previously, but Coalition's got their fuel excise reduction, which should save families about $1,500 annually by reducing the fuel excise by 25 cents. So I'm not going to go into the various parties' policies on health or other areas that you can consider yourself. Just bringing you what is going to be most impactful for housing and our hip pockets here in Perth. Hope it helps.
So final recap, there's going to be a lot of global volatility and it may actually benefit. It's highly likely to benefit property in the next 6 to 12 months, especially with interest rates likely to be heading lower. The flight of money from shares into hard assets such as property, And with Liberals policies, if they get elected, let's keep an eye on how the effect might be on migration. And let's keep an eye on the potential slowdown to China and the effect on our job markets and projects in the coming months. So there'll always be noise in the market, whether it's tariffs, elections, interest rates. So stay focused on your long-term plan and strategy. And if you do need help with that, reach out and get in touch with us. We've also, I like a little bit of gear in the market because it temporarily gives us a chance to secure good assets for people that are focused on not just the short and medium term, but the long term as well. And so this little month between now and when the interest rates likely do decrease could be a little window for us to make some good purchases for our clients. So get in touch if you need help in that area too. Hope you've enjoyed this episode, and I'll catch you on the next one. Share it with any friends. If you're not already subscribed, and if you haven't already posted a review, those would be appreciated too. Catch you soon. Bye.
Just a reminder, the information discussed in this podcast is general in nature. As we don't know your specific situation, you should always seek professional advice before taking any action. For free market reports on your suburbs of interest and other helpful resources to grow your wealth, make sure you join my property investor update at investorsedge.com.au/join. And finally, make sure you're a member of our Perth Property Investment Facebook group to be part of the conversation with other like-minded investors, get help to your questions, and get a feel for what's going on out there in the market. I'll see you in the group.